Gentleman yields back. We'll now go to the gentleman from California, Mr. Sherman, for 5 minutes.
You play an important role on foreign policy. I hope in dealing with the IMF, you make it clear that our support for Pakistan's request is focused on the fairness of their elections and human rights and democracy in Pakistan in general. I hope you'll do everything possible to make sure that any change at the IMF does not give Iran additional special drawing rights or allow them to use their existing special drawing rights to turn into currency that they can use. And finally, I hope that we see sanctions against the individuals Human Rights Watch has identified with the Amhara regional forces in northern Ethiopia, and that you'll focus on Eritrea's terrorizing of the Tigray region of Ethiopia. On taxation, I want to commend you on the direct file program, but you can go a step further. Senator Warren and I have focused on the 36 countries where they send you a pre-populated return. And you can just click yes, or you can change it. And of course, it's voluntary. You don't have to look at it at all. And I look forward to the day when the vast majority of taxpayers can just click yes, or maybe add the name of a newborn child and be done with their tax return. On crypto, you were instructed by the Infrastructure Investment and Jobs Act to have the rules enforced for the 2023 tax season. They're not enforced, so you're behind on rules designed to enforce taxation on crypto transactions. But I want to focus your attention on the capital gains allowance. We provide at very great cost to our Treasury an incentive for investors to invest in stocks, chiefly, also real estate, because we want to build our economy. And there's arguments as to whether it's very effective or only slightly effective. But the reason for capital gains allowance is to encourage investment that builds an economy. Can you think of a reason why we would, at our cost of the U.S. government, incentivize people to invest in the Chinese economy? Why do we provide a capital gains allowance for investing in Chinese stock? Is there any reason you can think of?
Well, in general, we've made a decision that capital gains should be treated similarly and only taxed when they're realized.
Well, I'm not talking about realization. You sell a Chinese stock at a profit. You pay a lower tax on that than your assistant pays on his or her earned income. Now, that's to encourage you to invest in the stock. Why do we want to, is there a national purpose in encouraging Americans to invest in Chinese equities that you're aware of? Because I'm not.
Well, I mean, in general, I think the view has been that both inward and outward investment are economically beneficial. There's certainly
I'll want to move on to another issue, but encouraging the building of the Chinese economy is not thought by most members of Congress to be a good use of federal funds. On bank regulation, there's no easy answer. If our standards are too low, we could see the need for bailouts as we did in 2008, which not only shakes the economy, it shakes the social fabric of our society. But if those standards are too high, we lose economic growth and we move money away from banks, which do an inadequate job of lending to small businesses in our districts, over to Wall Street, where they don't even, for the most part, pretend to do the job of investing in small businesses in our districts. We have the possible designation of SIFIs. When I was here and we crafted that definition, the thinking was some companies have such liabilities that if they go bankrupt, it destroys the whole economy. Is there a reason why you're focused on identifying as SIFIs entities that don't have substantial liabilities, such as mutual funds and money managers?
I'm sorry, we're certainly focused on the entire financial system. FSOC is not only on banks.
Right, but is your why would you designate an entity that doesn't have substantial liabilities.
We would only designate an entity if IFSOC determined that its material distress would pose a severe threat to the financial stability of the United States.
Thank you very much.
The gentleman from Oklahoma, Mr. Lucas, is recognized.
Thank you, Mr. Chairman. And Secretary Ellen, thank you for testifying today. During our discussion when you were here last before the committee, the Basel Endgame proposal had not been officially proposed by the banking regulators. And since then, over the past 6 months, there's been a robust response to the overwhelming negative consequences of the proposal. I'm concerned that the Basel Endgame will undermine many of the steps taken by Congress to strengthen the financial system and support the economy. One example I have focused on is the impact on derivative end users. Back in 2010, I sat on the Dodd-Frank Conference Committee, where there was bipartisan support to not disadvantage end users, like farmers, ranchers, small businesses. This has a long history of broad bipartisan support. Unfortunately, both of the proposals from the Federal Reserve will drive up the cost of hedging for end users and undermine the long-standing work done by Congress and this committee. And this is just one example of how the Fed's proposal moves us in the wrong direction. Secretary Yellen, at some point in the months ahead, the banking regulators will vote on a final rule. When we last discussed Basel Endgame, you said that Treasury would have the opportunity to provide feedback on this proposal. Given Treasury's mission, which is to maintain a strong economy and promote economic growth, has Treasury provided feedback to the Fed, number one? And number two, are you confident that the proposal will not undermine the resilience of the U.S. capital markets that are so critical to the economy?
So I'm not aware that Treasury has provided any formal feedback to the Fed on the Basel regulations. As you know, they've received many comments expressing concern about a number of different proposals that were embodied in the Basel III package. And I know that all of the banking agencies that publish that are considering how to respond to those comments and concerns in trying to craft a final rule.
Well, are you concerned that the proposal will undermine the resilience of the U.S. capital markets?
I'm not going to take a position on the details of the rule. I would just say again that I believe that there should be strong capital and liquidity standards to ensure that these institutions operate in a safe and sound manner. But it's up to the banking agencies to evaluate the specifics.
So it's fair to say that whatever concerns might be at Treasury don't rise to the point of providing feedback. Okay. Another aspect of the Basel Endgame is the impact on the U.S. Treasury market. Consumers, businesses, governments, the global financial system depend on a well-functioning U.S. Treasury market. And of course, a healthy market for U.S. Treasuries is essential for U.S. government operations. However, the proposal from the Fed could cause banks to pull back from the market-making activities in the Treasury's future markets, which would raise costs for market participants. At the same time, just this past December, the SEC, the Securities and Exchange Commission, finalized a rule that would increase central clearing for Treasury markets along with other reforms. So you have the increased cost coming from the Federal Reserve, you have the significant market structure reforms coming from the Securities and Exchange Commission, all impacting U.S. Treasury market at the same time. I just worry that this could create a huge problem. So, Secretary Yellen, how have you engaged with the SEC and the Fed to evaluate the cumulative impact of the proposals, and how can we be sure that there will be no significant market disruptions? Turbulence may be about a better word for it.
Well, we've formed an interagency working group that includes all of those agencies and Treasury and the New York Fed to focus on the resilience and operation of the Treasury market. It's critically important to us that the Treasury market is well-functioning, deep, liquid, and can enable the dollar to be the most secure asset of any in the world. And they are looking at specifics, including improved disclosure. They have taken the view that increased central clearing can make the Treasury market more resilient, and they're considering many factors.
The gentleman's time has expired.
Chairman, my time has expired, but not my concerns.
Thank you. The gentleman from Georgia, Mr. Scott, is recognized.
Secretary Yellen, in its 2023 annual report, FSOC identified several market vulnerabilities related to commercial real estate lending. FSOC specifically identified significant concentrations in the commercial real estate for many of our regional and community banks as a risk to our entire banking system, which means our entire economy. And I want to ask you your thoughts on that. And you went a little bit further in that report, and I quote, "The vulnerabilities to the regional and community banks are negative trends in the office market and an erosion in high multifamily property values." Now, Chair Allen, we're talking about the backbone. These communities and regional banks are the backbone of our banking system for most of the American people. So my question to you is, given that the commercial real estate loans are the largest loan category for half of U.S. banks, and that 1/4 have commercial real estate loan portfolios that are significantly larger relative to their capital reserves, Secretary Yellen, should we not be concerned that a spillover effect could lead to banks lending less to other very important sectors of the economy, like our American people?
Well, thank you for that question. Commercial real estate is an area that FSOC focused on in its annual report. And it's something that the Financial Stability Oversight Council addresses in its meetings on a regular basis. Because, as you mentioned, many, especially smaller and regional banks, have concentrations of commercial real estate lending. I think office properties in some cities are of special concern because vacancy rates have increased and there have been declines in property value.
Yes, and my time is slipping by, but I've got to ask your opinion on something that is very, very important to me, and that is the implementation of this Basel III endgame proposal. As you know, the largest banks would be required to hold more capital for their actual risk-taking, and I remain deeply concerned that this will further diminish the credit capacities and weaken the economic conditions of our American people. Tell me your thoughts on this Basel endgame business.
So the banking agencies, I know, have received many comments that have expressed this concern, and the heads of those agencies, the financial regulators, have expressed a commitment.
But I want to know, I have such respect for you and your economic genius and prowess in the financial system. And I think the majority of our committee is very much against it. How do you feel about it? Are you with us on this? This will be terrible for our economy.
Well, I think it's important to ensure that credit availability is not significantly diminished.
But do you support this in-game business with Basel?
I said I do believe it's important to have a strong banking system with adequate
I
and
really wanted a
sensitive
yes or no.
capital.
The gentleman's time has expired. The gentleman from Texas, Mr. Sessions, is now recognized.
Mr. Chairman, thank you very much. Madam Secretary, welcome back. You're here today to discuss this annual report of 2023 from FSOC. And I want to refer to, if you have someone there giving you notes, page 10 of the report. But I'd like to start with, on February 16th, 2022, then the chairman of the Budget Committee, John Yarmuth, said in a well-understood statement, quote, Congress need not worry about rising borrowing costs because we can print all the money we need, end of quote. The national debt at that time was $30 trillion. It is now $34 trillion, and the national debt will triple, just the projection, from $475 billion in 2022 to $1.4 trillion in 2032. At what point does this become a problem? And I say this because your own report says on page 10, higher interest rates and slowing economic growth, they correspond to each other, have increased non-financial corporate credit risk. If credit quality significantly worsens, a potential wave of debt defaults could lead us to large redemptions at investment funds with significant liquidity mismatches and in turn disrupt bond market functions. Moreover, such defaults may have a cascading effect across broader financial markets. Madam Secretary, tell me about what Chairman John Yarmuth, a Democrat from Kentucky, said, and tell me your viewpoint.
Well, let me make sure. Your question was about the federal debt, was it not?
Well, of course it is. That's what John Yarmuth was talking about, chairman of the Budget Committee.
Well, I think it's critically important that the U.S. Be on a fiscally sustainable path. And President Biden has put forward a series of budget proposals, most
Spending
recently,
proposals.
No, and also tax proposals and investment proposals that would, I believe, guarantee that we are on a fiscally sustainable path.
Does that mean ever attempting to balance any one particular year over the next 50 years?
Well, I don't think the budget needs to be balanced to be
This
on a
is what I wanted to get at. So your tendency is to say, as Mr. Yarmuth did, Congress need not worry about rising borrowing costs. As you know, Treasury and the Fed are going to have to go to the marketplace and pay an extra large amount of money because of the risk that our debt now poses to the United States. And so they are paying record amounts for Treasury, which takes money that is in banks, local banks, out of local banks that provide small business loans, housing loans, that provide agricultural loans, that do all these things. It's shifting the marketplace literally $10 trillion from where it had been in stability to now to the Fed.
Well, I believe that.
And we're paying for that.
I agree with you that we need to be on a fiscally sustainable path. And it's critical to reduce deficits in order to ensure that that's the case. And that is why President Biden's budget for 2024 proposed an additional $2.5 trillion of deficit reduction, coupled with investments in our economy that are critical to ensure that we grow and collect tax revenues that are.
Thank you, Madam Secretary. I would tell you that putting 10 million new illegal people in this country and living in Central Texas, seeing the federal government let all these people in, give them free ticket rides, cell phones, go to the city of their choice, live in housing to knock children out of their own school, protect them at Chicago International Airport, doing all these things is not wise management of our resources. Mr. Chairman, and Madam Chairman, I want to thank you for being here. Mr. Chairman, I yield back my time.
I thank the gentleman, and the gentlewoman now from New York, Ms. Velasquez, is recognized.
Thank you, Mr. Chairman. Ms. Secretary Yellen, welcome to the committee, and thank you for being here. I just want to say that I have great respect for my friend and colleague, Mr. Scott, but he does not speak for all members on this side of the aisle on the Basel III proposal. I, for one, support stronger capital requirements at our largest institution, and I want the record to reflect that. Ms. Yellen, the FSOC's annual report identifies property insurance, which is becoming prohibitively expensive or inaccessible for homeowners and developers, as an increasing risk to financial stability. This is becoming a more pervasive issue in my community, particularly when it comes to affordable housing. How is FIO working with the NAIC, insurance carriers, and state regulators to analyze this increasingly important issue?
Thank you for that question. We're very focused on rising insurance costs in particular areas of the country and the risks that it poses to homeowners, to banks, to financial stability. FIO has been working to improve our understanding of the ways in which climate change is impacting the availability and cost of insurance coverage. And in early January, OMB approved a data collection effort by FIO that would be at the zip code level to collect granular data to evaluate what's happening to insurance premiums and availability across the country. FIO looks to work with the NAC that's engaging in a similar effort to reduce the burden associated with this data collection, and that collaboration is ongoing.
And how is FIO working to ensure that it is not duplicating efforts already conducted by the NAIC or state regulators?
So there is a collaboration. The focus is and need for data is slightly different for NAC and FIO, but I think there's a good chance that they will be able to collaborate and go out with a single collection in order to collaborate and reduce burdens on insurance companies.
And has the council or FIO had any conversations with HUD on how these insurance premiums are impacting the operation of its affordable housing programs?
I believe that FIO and the council have had discussions. I know they have had discussions with other agencies. I'm not positive. I assume HUD would be in them, but I'd have to verify that.
Well, I will encourage your department to really talk to HUD because we cannot address the affordability crisis that we have in housing in this nation without tackling the issue of the cost of insurance in our country.
Absolutely.
Last February, the Treasury Department published a white paper that identifies several challenges in the financial services sector's growing reliance on third-party cloud service providers. In response, an executive steering committee was launched by the FSOC. How has the executive steering committee worked with the big three service providers and the member agencies to reduce identified challenges?
So the executive steering group has been very active on this issue. They have formed, I believe, 9 different public-private work streams. Each one is looking at a specific gap that was identified in the report that was issued last February, and they're trying to understand also what authorities the existing regulatory agencies have, how they have been using them, and they will release recommendations later this year.
Thank you. I yield back.
The